So I want to take a look at this idea. Is the Fed too slow to cut rates? And that is really what triggered or is triggering the fear in the markets, the fear in bond yields, the fear really everywhere that we see, whether it's the bond market, the stock market. Is the Fed too late to cut rates? Should they have already cut rates? And should they maybe even go 50 basis points in September? Well, my take on that very simply is this. I think they should only go a quarter point in September. If they were to go 50 or 75 basis points, I think the market would become very fearful very quickly. The market would think and investors would think perhaps the Fed is hiding something or knows something we don't know. Maybe things are a lot worse than they are, than what we see. And I think the market would sell off. I know that many believe that if they cut rates and cut rates quickly, that would spark the market and market would move significantly higher. I think if it did move higher, it would be quickly followed by a downturn in the market, again, based on fear that perhaps things are worse off than we believe. But let's look at what the Fed should be looking at. And we have a few charts here. Let's put up the first chart here. There we are. This is the, just get my glasses here. Job openings, right? I believe it's job openings. And we talk about JOLTS, which are the job openings, how many jobs are available. We talk about hires, who's hiring. You can clearly see here that the jobs data is definitely falling off, right? You can see that jobs data is falling from the top left to the bottom right. Not what you want to see, but maybe what the Fed would like to see when you're battling inflation. Let's take a look at another jobs. I think we have the jobs unemployment jobs chart here. There you go. That shows what I said off the top. 114,000 jobs created, 179,000 jobs created the month before. You could clearly see that there is a slowdown in jobs. So we have a slowdown in hiring, slowdown in job openings, a slowdown in jobs created. We don't have a chart on this, but I can tell you that manufacturing in the US right now, the last number we received was less than a number of 50, and 50 shows basically you're kind of flat. Anything above 50 shows expansion. Anything below 50 shows contraction. The last reading we received was below 48. So we are seeing a manufacturing or contraction in manufacturing in the US. So that again should be telling the Federal Reserve that things are slowing down. Let's go to our next chart here, which we have. And there you have it. That's retail sales. So you can clearly see that retail sales last month, barely above the flat line. Again, the month before that, obviously a little bit better. The month before that, you can see there was a decline in retail sales. So the consumer definitely appears to be tapped out, definitely appears to not be looking to spend as much, or at least look for as many bargains as they can. Just looking at here, they're continue to spend money, but definitely not at the pace and at the rate they were spending money before. Next chart here we have is on inflation. You can clearly see, and this is a great chart because you'll definitely see, and I have a copy of my chart here as well. You can clearly see where the Fed policy rate is, which is a flat rate. You can see it flattening out here towards the right side of the chart. You can see that core inflation, core CPI, 3.3%. Headline inflation or headline CPI is 3%. Important because we're going to get a CPI number pretty soon. Next week, I believe, we're going to get a CPI number. And you can also see that the PCE numbers, core and the headline number, in and around 2.5%. And that's the number that the Fed likes to look at a lot more than CPI. So, overall, you can say, tell that inflation is starting to come down as well. So has the Fed moved quick enough? Well, you have inflation coming down, CPI, PCE, you have retail sales falling, manufacturing in contraction, job openings coming down, hires coming down. You have job growth, jobs created falling as well. All these are major indicators. And if that's not enough, major banks are starting to say that individuals are not spending as much. Retail CEOs of retail companies saying people aren't spending as much. They're looking more selectively. They're looking at bargains. So is the Fed late to cut rates? Well, I leave that up to you to decide as the viewer. In my opinion, if I were the Fed, yeah, I would be cutting a quarter point in September and possibly, depending on the data, a quarter point, I guess, every meeting till the end of the year. There are 3 more meetings. I'd be cutting 3 more times. And to me, if they do that, and if they say that this is to accommodate a soft landing, this is not out of fear, but accommodating a soft landing, I think the market will like that. And I think we can see that soft landing that we've all anticipated for so long. So we'll have to see what the Fed does in September, but I believe a quarter basis point cut is pretty much a done deal.